Welcome to Call Wiz, where we break down earnings calls. Today, we are breaking down Palantir's second quarter of fiscal 2026, the August 3rd call, and the company is not whispering. 93% year over year revenue growth, 1.22 billion in adjusted free cash flow, and a rule of 40 at 155%. They are calling it the quarter that proved the thesis.
Yeah, and the framing is blunt. Sovereign AI has arrived, not a soft product pitch. A market shift they say they have been warning about for years.
Scoreboard first, because the street bar was real and they cleared it. Total revenue 1.935 billion. Consensus around 1.81 billion. Clear beat. Up 93% year over year and 19% sequentially. Highest ever reported year over year growth rate.
Cash is the second punch. Adjusted free cash flow 1.22 billion, up 115% year over year, 63% margin. GAAP net income 1.062 billion. Earnings per share 41 cents versus street around 34 cents. Growth and cash showed up together.
Third is Rule of 40 at 155%, a 10-point jump quarter over quarter and the 12th straight expansion. Fourth is adjusted operating income 1.194 billion, 62% margin, with GAAP operating income 912 million and a 47% margin. This is not growth bought with losses.
Stop the laundry list there. The print is loud. The interesting part is why they think it is structural.
Chapter 1 is the mix underneath the headline, because that tells you where demand actually lives.
Spoiler, the United States.
U.S. revenue is now over 81% of the company, 1.573 billion, up 115% year over year and 23% sequentially. U.S. commercial is the rocket, 764 million, up 149% year over year and 28% sequentially. U.S. government grew 90% to 809 million. International commercial only 26% year over year and 2% sequentially to 182 million. International government 42% to 181 million. Four engines on paper, one country doing the lifting.
Karp basically said Europe growth sucks while still defending the mission work. Useful honesty. International is a watch item, not the hero.
Commercial total contract value bookings 2.337 billion, up 118%. Total remaining deal value 13.1 billion, up 83%. RPO 4.9 billion, up 103%. Backlog math supports the US story even if Europe lags.
Deal momentum gets less abstract. 220 deals at a million or more, 98 at 5 million plus, 73 at 10 million plus. Record highs. Net dollar retention 157%, up 700 basis points. Karp called that anomalously strong.
Top 20 customers now average 124 million trailing 12-month revenue each, up 67%. US commercial customers 653, up 35%. Trailing 12-month US commercial total contract value 5.964 billion, up 117%. Not only new logos, existing accounts are expanding hard, which is why concentration is both strength and risk.
157% NDR is the opposite of churn theater, but when top accounts compound that fast, one pause still hurts.
That sets up the real argument. Chapter 2, Sovereign AI. Why enterprises are fleeing the pure token model, and why Palantir thinks it is the door.
Management spent more airtime here than on any single line item. That is what they want underwritten.
Ryan Taylor's line is the thesis in one breath. Enterprises want AI sovereignty, owning the operational definition of data, logic, actions, and security. Data is the treasure, the alpha. The token model, in their telling, breaks budgets and trains competitive advantage into foundation models that can then compete with the customer.
Emotional core. You are paying to commoditize yourself. Commercial claim is control of weights, logic, and security boundary, not endless meter spinning for slop.
4 pillars: your data, your weights, your logic via ontology, your security. No IP migration as the business model, heavy alignment language against the parasitic vendor frame they say Silicon Valley taught everyone.
Product-wise, Shyam is pushing benchmaking over benchmaxing. Public benchmarks can be gamed. Customer specific benchmarks become the hill you climb, and AIP is the control plane to trade cost, performance, and latency while deciding whose weights run where.
Proof point that stuck. Within 24 hours of bringing Nemotron Ultra into the stack, 5 production tasks where standard Nemotron Ultra without post training beat Frontier models. Frontier on a leaderboard is not Frontier on your workflow.
Bake Off story. Major Silicon Valley tech company. Frontier Lab plus deployment team versus AIP and Palantir forward deployed engineers. Same customer, same timeline, same models. Lab failed on ticketing automation. Palantir built agent swarms recommending marketing, packaging, pricing changes, and converted a 10 million annual contract value contract. Lab shown the door. Only Palantir has FDEs, and they are not subtle.
Stack layers feed the compounding loop. Data integration, ontology and actions, security and audit, agent SDKs, orchestration with telemetry, evals, then post training with supervised fine tuning and reinforcement learning inside the customer boundary. Automated model factory. Weights the customer controls. NVIDIA partnership name checked for fine tuned weights that outperform Frontier in their claim set.
Customer proof is not theoretical. Multinational tech expanded from one operating company into a 3-year, nearly $370 million deal. Global asset manager converted to 3-year, $35 million total contract value across 4 verticals. Software and services firm signed initial $15 million 5-month deal after a May agent camp. Nonprofit health system converted a late 2025 pilot into 3-year, $37 million. Kirkland and Ellis, days of lawyer analysis to minutes, impossible without ontology. New operating model language, not a seat license.
U.S. commercial total contract value bookings 2.132 billion in the quarter, up 153% year over year and 271% on a dollar-weighted duration basis. Longer, larger checks once they cross the chasm. That is the conversion pattern they want extrapolated.
Q&A sharpened the timing. Mariana asked why enterprises only now get the sovereignty point 3 years into the AI wave. Shyam split it. First, efficacy, turning models into economic value at the application layer, then the realization that partners were building competitive products and that metadata, reasoning traces, and usage exhaust may be more valuable than raw enterprise data. That took a couple quarters to sink in.
Karp's answer was cultural, fully aligned even when it is not purely economic, like supporting European institutions where growth is weak. Colony of artists making bets before the playbook exists. Outsider status forced results. He also said older partners who barely engaged are now showing up at sovereign boot camps and migrating from Foundry only into ontology and the full stack, which is one reason NDR looks ridiculous and could get stronger.
Gil Luria press lock-in risk the other way. If you buy orchestration from a lab and the model gets pulled, mission-critical systems fail. Happened this year. Karp and team said they already switch models across U.S. government, and the point of benchmaking is continuous empirical replacement, not waiting for a rug pull. Ryan framed it as converting tokens to value with the right model for the right job, not monogamy with one lab.
So, where does this go? Chapter 3. Guidance, trajectory, what has to stay true.
Largest full-year revenue guidance raise in their history. Full-year 2026 revenue between 8.15 and 8.158 billion, midpoint 8.154 billion, 82% growth, an 11-point increase versus last quarter's guide. U.S. commercial in excess of 3.424 billion, at least 134% growth. Third quarter revenue 2.16 to 2.164 billion, adjusted operating income 1.292 to 1.296 billion, adjusted free cash flow 4.5 to 4.7 billion. They still expect GAAP operating and net income every quarter.
Street full-year revenue consensus was around 7.73 billion. New guide sits materially above that bar. Not a tap, a shove.
Karp went further than formal guide. He is driving growth equal or above U.S. commercial for the next 18 months. Aggressive internal bar forces them to find technically excellent partners who can occasionally compete but still scale the demand.
Bear case still needs airtime. International commercial at 26% year over year and 2% sequential is soft. If sovereign AI is global, the print is still a U.S. story. Europe may follow case studies or stay mission subsidy land.
Customer concentration, top 20 at 124 million each, is wonderful until one mega account pauses. Mitigant is 157% NDR and breadth across deal tiers, but it is real. Expense ramp, adjusted expense 741 million, up 37% year over year. Stock-based comp 265 million. They warned third quarter seasonality ramps costs on new hires and product and marketing. They can fund it with 62% adjusted op margin, 1.22 billion free cash flow, and about 9.2 billion in cash, cash equivalents, and short-term treasuries. Investment is still accelerating.
Valuation sensitivity is the market risk. Premium multiple on growth plus margin means any U.S. commercial deceleration compresses hard. Near term cushion is the 11-point guide raise and 12th straight rule of 40 expansion. Filings show the profitability turn is multi-year. Year-ago quarter revenue was about 1 billion with GAAP operating income around 269 million versus 1.94 billion and 912 million this quarter. Margins expanding alongside.
Open questions. How fast can they staff elite FDEs and technical partners without diluting the tradecraft that won the bake-off? How durable is the sovereign boot camp education wave once novelty fades? Whether international ever becomes a second engine, and whether multi-model control shows up in expansion rates, not just rhetoric, when a frontier model gets pulled again.
Karp closed on philosophy as much as numbers. Colony of believers and artists, outsiders who need results. Sovereign frame inclusive of American workers, with over 1,000 American Tech Fellowship grads and the submarine parts manufacturer cutting production planning from 30 to 40 days to less than one. Get off the sidelines.
If you buy the thesis, watch U.S. commercial holding near the guided 134% full year pace, bookings staying skewed to multi year conversions, Rule of 40 not rolling over while they invest, and NDR staying absurdly high as older accounts migrate into the sovereign stack. If you do not, watch U.S. sequential deceleration, expense outrunning the story, and international stuck while concentration rises.
For next quarter, the third quarter band is tight around 2.16 billion. Hit that with margins intact and another clean US commercial print, and the trajectory gets another data point. Miss the US pulse and the sovereign narrative gets stress tested fast.
The call had swagger, but the numbers and guide raise make that swagger expensive to fade near term. Still a discussion, not a destiny.
Reminder, this is discussion and analysis for entertainment and education, not financial advice. Do your own work.
Thanks for listening and watching. We will see you in the next video.
See you next time.